Welcome back, YouTube. So today is the day, it's the big day. So on one of the most important days of the year, especially thus far, but this is also going to set the tone for the year as far as for the layout of how we're going to approach the Fed's target and whether or not they're actually going to pivot. So we're going to hear from Powell today, and the whole sentiment is whether or not he's going to be hawkish or is there going to be talk of a pause. We're going to read some notes here, and the most important thing is to kind of just to see that we have been getting some supporting data that inflation has been cooling. So this can kind of hopefully get them to kind of change course a bit because you don't want to press down the economy so hard that you end up manufacturing a man-made recession, which can literally be it can kind of overshoot us from like a small R recession that we're kind of like projecting versus us going into a deep recession and literally just throwing off a lot of the hope for the market to do a recovery this year. We know that we're going to start getting some of the year over year for real estate within the next couple of months, and the theory is hopefully the Fed pivots by then so that that's kind of not like a shocker with the Fed saying, well, we're still raising rates. We only are at like 4.75 now, 4.5 now. So we're still raising rates. We're going to hit our target. And, oh well. So, if the economy goes to hell in that process, then, we have to get inflation down to 2%. So hopefully that kind of changes before then. But let's kind of get into the notes here to get an idea of what we can expect tomorrow. So they raised interest rates from basically 0 to 4.25 last year. So tomorrow, the rates are expected to go to 4.5 or 4.75. It's in my opinion, I think the markets have already priced in the 0.25. So I think more than likely we're looking at the 4.5 right here. 4.75, I actually believe will shock the market, and that'll actually be very bad. 4.5 will kind of be neutral, in my opinion. Any talk of like a pause or winding down inflation, saying that we're going to kind of pivot from that 5% that we're going to talk about in a moment, then that will certainly be bullish. So, but I highly doubt we're going to get that 4.75 tomorrow. And so the first conference comes out at 2 p.m. and they pretty much saying that they're going to raise it to 5% in 2023 and kind of hold it there and see at that point they would kind of pause and kind of see what that's going to do to the actual inflation rate. But since now we have data coming out saying that the inflation rate is coming down already, do we really need to go that extra 0.5? So I do believe we're going to get the 0.5 tomorrow. If he comes out and says that we're not going to do the 0.25 and we're going to stay at 4.25, that's going to be extreme. Like it's to the moon at that point. But I do believe we're going to get the 0.25 tomorrow. But the question is, are we going to stay there at that 4.5 versus going all the way to that 5 mark and holding it to 2023? And I think that we have a lot of evidence to get a pivot sooner than later. We see that the consumers are beginning to spend less, so they're not putting the strain like on the supply chains and all that kind of good stuff and forcing quote unquote consumer inflation. And we're able to just use that as like a measuring stick to combat the actual numbers that we're seeing from like the core inflation rates. So they're going to stay vigilant on inflation. I don't think that they're going to break out on the mission accomplished banner just yet. This was said by a rate strategist at TD Securities. If they don't send a signal that they really want to get inflation under control, the market could overinterpret that as a signal that they're done. That's not the message they want to send. And yeah, that's kind of like what I was saying. If we get the signal tomorrow that they're close to being finished, or if they're going to stop at 4.25 or say anything like a pause, then it's going to be very bullish. And I think that this commission has made enough mistakes. It took them roughly about a year to admit that there was inflation in the first place, and then they missed it on their targets for about 6 months straight. So I think right now, them fumbling kind of close to the quote unquote finish line right now will be very embarrassing for the Fed, and will further lose trust in their ability or even knowledge of what's going on. So I think what's likely tomorrow is that we're going to see a tightrope, or really today, actually, when you guys see this video, you're going to see like a tightrope walk. And I think Powell's going to be very diligent with his words, what he is going to say and what he isn't. And I think that he's going to do the 0.25, but leave it open to go to the 4.75, the 5. And then we get a pivot like before the next meeting, or they kind of start leaking their information to the press, because we always find out what they're going to do before. So it's never really like a shocker when he comes out to speak, unless he gives some extra details with the question or something like that. So I think that we're going to do that, and then he'll kind of leak that pivot out before the next Fed meeting. I think we're going to have that pivot at the very latest by March. I think that we're going to be roughly around the 1 year mark without the QE, and we're going to have that pivot. So that's just something to look forward to over the next 60 days. And if you couple that with the unemployment rate, you can see here it's the lowest rate it's been in half a century. It's at 3.5%. And they are, pretty much what I was saying. They're taking a cautious stance, trying to avoid pulling back prematurely on their assault on inflation, because the last thing you want is to have an uptick. But I don't think that that's going to be the case. But I do think they're going to kind of give it like another month or two with the 0.25 now, which technically gives them another 30 to 60 days. And then they'll say, okay, let's pause and see, and we'll take that updated data and kind of go from there. And this is the real kicker right here. I believe we shouldn't lock in a peak interest rate. Ms. Logan said, even after we have enough evidence to pause rate increases, we'll need to remain flexible and raise rates further if changes in the economic outlook or financial conditions call for it. So, and I think they'll have the ability to do that. I don't think that we'll see a massive uptick if they do pause. And it's not like they're saying they're done. They're just saying that, hey, we're going to pause and see what happens over the next month or so. What are rates going to continue going down? I don't think that that's it's going to send a shocker through the market saying, oh, they're done, let's celebrate. It's a sign that we're close, but at least on their end, as far as work competency, it's not like them saying we're done and then they have to come back in a month or two and say, oh, never mind, we missed it again. So I think that'll be a safer way for them to not pressure the economy into a recession, and they get to look competent as far as from their efforts. So I think that's kind of, in my opinion, I think that's what's most likely that we're going to see over the next couple of days. But of course, we're going to find out today at 2 p.m. just what Powell is thinking. So let me know what you're thinking in the comment section. I love to hear from you. See if you're thinking we're going to get that 0.25, or if we're actually going to go all the way into the 5%. If you like anything I had to say, share the video, subscribe to the channel, and I will see you in the next video.